Good morning, everybody.
You already got one, and it's this thing here.
No, you've got one, and it drives you around.
But that's true.
Same thing. So we already have one. We just don't have one that makes us breakfast yet.
Right.
It's just another duty. Well,
It's coming along.
Everywhere you go, every conversation, this is listening.
Oh, definitely. Yeah. All right. Well, good morning, everybody. Welcome to Loan Officer Breakfast Club. Glad to have you here. Wow. See, Monday, June 9th. Kind of got the first week of June out of the way in the can, right? Hopefully everybody's doing well. Let's see here. Something in the chat. Oh, a note taker. Okay, well, that's cool. Whatever. Yeah, all right. Good morning, everybody. Well, I hope everybody's doing well today. Let's go ahead and get started with just some stuff. We're going to do this 2 times. I'm going to mention it, right? And this is for the people that just got here right in at the very beginning. Guys, don't forget, we do have a Mastermind Retreat coming up, a live event in Michigan with Carl. This is, what are the dates, ladies? What are the dates for this?
17th and 18th.
Of
July.
So July 17 and 18. And this is going to be in Michigan again, right, Carl? So this is going to be...
it's going to be right at my office. And
right.
The advantage of doing that is we're going to talk about building teams, and I'm not just going to be telling you what to look for. I'm going to be showing you what to look for, or probably better said, they're going to be showing you what to look for, and frankly, doing it right there at the office, I can keep the expenses down, so I can keep the ticket price down. So so that's another part of it, and we can we're all going to have. We're going to have lunch together both days, and at the end of day one, we're all going to have dinner together. So I'm looking forward to it, man.
It's going to be really cool, man. I know the last time this went down, a lot of people really dug it. They thought it was awesome.
It's a very productive. There's nothing like I call it a guaranteed consumption, because we could get not all of it, because some of it needs to be done in person, but we could get some of it and put it up on the web, and here, go watch this 3 days of content. We all know, myself included. I'd watch an hour, even if it was like, man, I really want to watch that thing that that Kristen put out, and I can't wait to watch it. And I know it's going to help me out. Life happens. I get an email, I get a phone call, I got and we don't end up watching it. Whereas if we sit there if we sit there all working together, not only we get the energy of people bouncing off of each other, it's a guaranteed consumption that we're going to consume the information while we're there, guaranteed. And it's not going to get put up on a shelf, even if it's something that you don't mean to do that with. We all do that. So that's why I still like doing the live events.
Yeah, very, very cool. A little biased, but there's no better place in the summertime than Michigan.
Yeah, so I was just going to ask you, Jen, how's the weather in July in Michigan?
It's amazing.
Pretty
it's
good?
The best time to be here. Yeah.
Really? Huh. Interesting. All right, cool. All right, so Mastermind Retreats is the link. We'll throw that in there again, mastermindretreats.com. And as a reminder, you can always go to Mastermind Retreats and just see what's coming up next. If we have any live events coming up, they're always there at Mastermind Retreats. So Mastermind Retreats is in the chat. You want to check it there. I do know for a fact that this event in Michigan, this is the second one you've done, Carl. I know there's already limited seating to begin with. There's not a lot of seats to start, and I know we've already sold a bunch, so even less is available right now. So there's not a lot left.
It's my office, right? So my office. It's a nice office. Don't get me wrong, but it's not. It's not. The Sheridan. Where you or it's not Mandalay Bay. Where you got all this space. I mean, it's an office with concrete walls, and there's just so much room. It's actually my preference. So I prefer it, so we can kind of. It's not just one person standing up on a stage and just kind of throwing things out on it. Yeah, it's more of a workshop, and some of it is workshop. So we'll be doing some of the stuff. You're going to walk away. You're going to leave the event with the thing already done and implemented. So I love doing those things. So anyway,
right on. All right, one more time. Mastermind Retreats again. Seating is limited. I know a bunch is already sold. There's just a little bit left. We just want to make sure we got the word out to you guys in time so you can get that booked into your calendar and get it done. So cool. All right. Well, before we get rolling, let's kind of go around and see what's happening out there. I did really like what we did last time. We like to hear wins, right? But it's also great to just hear some challenges, right? Here's some challenges. So you got a challenge you want us to address for you? Anybody got a challenge real quick that you want to throw up, talk about, chat about it? This would be a good time to do it. Anybody? Challenge. Anybody got a challenge? No challenges in this group.
I don't want anybody to know what mine is.
Good point, Carl. No judgment here, right? It's just, okay, we got a couple
my
of
dirty secret.
My dirty secret. Yewande says she's got a challenge, which I find hard to believe. But let's have it, Yewande. Let's go. What's your challenge? I can't spend all my money. I'm having a difficult time spending all of my money. I would like. Go ahead. What's your challenge, Yewande?
Good morning, everyone. So finally, I decided to get some help because I've been doing it by myself, and apparently is getting me to a point of burnout. And I'm like, and not only burnout, I think is limiting me because I'm not able to produce at a high level that I think is possible. So I'm getting help. So my question is, how do I get my people? I'm getting 2 people to help me. How do I make sure that, number one, they are on task, they're producing while not being perceived as being a micromanager?
That's a great question. That's a really good question. Carl, what's your thoughts on that?
So you have
That's a really good question.
Yeah, it is. So you have 2 people. Is that what you said?
2 people.
Yeah, perfect. So who's in charge?
I am.
All right. And when you're gone, who's in charge?
I am.
Oh, well, there's a problem.
Okay.
Yeah. So how I do it is when it's just me, I'm in charge. When it's me and somebody else, I guess one other person, I'm still in charge. As soon as I hire the second one of them is in charge. Otherwise, I'm spending my time managing, which is a very necessary thing. Don't get me wrong, and it's a very admirable career. That's just not what you and I are. We're salespeople, and so if I hire, Susan and Debbie, or Bob and Jerry, or Bob and Susan, or whatever that case, if I hire Susan and Debbie, I'm just making up 2 names here, and then I leave. One of them is even before I leave, one of them is in charge, and so they're the ones that's making sure. And that way, I have one person reporting to me, not 2. When I hire 3 people, one's in charge of the other 2. And it doesn't necessarily mean that the like whichever is the most naturally alpha of the 2, I'm going to put in charge, because you definitely need somebody that's got some alpha. You definitely need somebody that's got a little bit of D in them, on the disc profile. I'm looking for like a 50. Let's call it a 45 plus on a D, that person's going to be in charge, and then that person just reports to me results, because what we do is we manage on results, not activity. Does that make? And we don't manage people, we manage results, and then the people are in charge of the results.
Okay.
And you want to tell you something else I've learned. It's my responsibility to offer somebody a job and give them the opportunity. It's their responsibility to seize it and run with it. That's not their success is none of my business. That's 100% on them. I can't be responsible for that. My shoulders aren't that big. Does that make sense?
Yes, it does. Thank you.
Yeah.
Put
one of them in charge. And then give them a quota. And then make sure whoever's in charge is making sure everybody, including themselves, is hitting their quota.
Did you run disc profiles on them, Yewande, by chance?
No, I didn't. That's a good idea.
Yeah. You can do it now. It's not too late. Yeah, do it now. And you'll kind of know, if you've been working. If I haven't met them, it's harder to tell. But if they've been already working with me for a little while, I know who's the alpha. And alpha doesn't necessarily mean they're smarter or better or anything. They're just a better manager. Like in my office, Julie's a better manager. She's not a better director of traffic. Diane's amazing at that, right? She's not a better salesperson. That's kind of what I do. That's what Kristen does. That's what Jen does, But she's a better manager than us, just different skill set. So it doesn't mean they're better or smarter or bigger or stronger or badder. They're just better at managing. Yeah. So sometimes I'll have somebody newer come in and they're in charge. They're a better manager. So I can have
What do you
somebody
think?
new coming in, and they're a better manager if somebody that's been there for 2 or 3 years. Doesn't mean the other person isn't valuable, just not as a manager. And as a general rule, salespeople make horrible managers.
Yeah.
And frankly, managers might make horrible salespeople. Like it's just it's a different skill set.
Mm.
Yeah.
What do you think, Yewande? Good answer.
Good answer. Thank you.
Yeah.
Well,
Great.
question. Talked about the disc profile. Where can I get the disc profile, number one? And how can I identify which one is complementary to my own personality?
So that's a much longer conversation.
Yes, it is.
Okay.
Yeah.
Yeah, that's a much longer. It's a fantastic question. It's a much longer conversation, and perhaps you could get with one of the team here and or either that or on one of our classes. We can pick that as a topic. But it's a fantastic question. It's a very important question. It's not a 5-minute conversation.
Okay. Thank you.
You're welcome, my friend.
Reach out to the team, Yewande. They can help you out with that stuff. All right, great.
Where you can get it though, just Google it. Just Google disc profile. Where can I get free disc profile? And you don't need a 182 page one. Just get your basic, what is my disc, and then we can help you read it.
Cool. All right, real quick, Monica, what you got?
Good morning, everybody.
Morning.
Overall, I've been having a good week. However, I'm finding this challenge. A lot of the realtors around here, I'm in the Fort Lauderdale area in Florida, they're using the down payment assistance program as a sale speech to their clients.
Hey, buddy, good morning.
Hold on.
So it almost feels like they're using it as like a bait and switch, to convincing people they're going to qualify for the down payment assistance, downtown heroes. And then, of course, those programs are so hard to get people in. How can I approach them without being rude or sounding like I don't want to do them?
So go ahead, Carl.
I got it. So Monica, how do you teach a rooster not to crow?
Yeah.
You don't.
You don't. Yeah.
You there's an old saying, don't teach a horse how to climb a tree, find a squirrel.
Mm-hmm.
You follow me? So you said a very big word, and it was a great question. You said a very big word, all realtors. All is a huge word. So the real statement would be some of the agents that I'm talking to do this. Well, if I've got somebody that's doing that, that's probably, I'd have a conversation. Hey, Monica, just FYI, this actually might be we'll have a higher closing ratio if you go after this. And then if I've got a horse that's trying to climb a tree, I'm going to find a squirrel. And the good news is there's thousands of agents that don't say that. So I would educate first, and then if it's receptive, awesome. If it's not receptive, just go get more.
Right. Okay. Thank you.
You're welcome.
Great stuff. All right, Julia, what do you got? If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time.
Anybody, and by the way, if anybody ever when you disagree or have a different viewpoint, please. I only learn when Bruce says, no, Carl, you got that all wrong, man. Here, let me show you what I found out. Oh, awesome. That's how we learn. I never learn from somebody that agrees with me. I learn from somebody that disagrees with me.
Yeah. Julia, there you go. Go for it. Go for it.
So my struggle is I'll meet with a realtor. We have a great conversation and then they ghost me. After the post-coffee follow-up, I'll never hear from them again. And, I've heard it takes about 6 to 8 calls for them to send you something. Maybe I should just go get more. What do you think
Wait, say that again. Maybe I should, wait, what was that?
Maybe I should go meet with more agents so that I have that opportunity.
Hang on, let me write that one down. I like that.
Just like a numbers game, right?
Might want to make a class, build a class around that.
Numbers game, go get more. That's great. Hey, so the important thing is to know what is the number, right? And there's a very clear number of that. It's 16%. So 84% will do exactly what you're talking about. 16% won't. So if when I'm ready to be closing, say 20 to 25 loans a month, I'll have met with 100 and 16 will be referring to me. When I got 16 referring to me, I've got about 20 closings a month, give or take. So that's the number. How quick can we meet with 100? One at a time. So if I meet with 100 in one meeting, that doesn't count. The follow-up counts, of course. I'm not saying not to teach classes and get in front of a lot of people, but that's that one-on-one follow-up, 16%. That's the number. And once you know that number, it's freeing. Then you go, oh, okay, now I know. I met with 5, none of them doing it. I haven't met with 16% of 5 is, and if we round to the closest number, 16% of 5 is 0.
Oh, okay.
Does that make sense?
Yeah.
Yeah. And I've seen some people beat that 16%. I've seen some people not quite hit that 16%, but that's boy, if you look at a dope chart, like if you look at like statistics and probabilities, that 16% is just like, boy, it's pretty right on the money. You might be 14, you might be 8, if you're like Frank and everybody loves Frank, you might be 18 or 20, but you're not going to be 80, you're not going to be 50, and you're not going to be 3. You're going to be about 16%, as long as you do the 12-week follow-up, of course. And I'm not relying on, well, I'm emailing them. How come they don't hear back? As long as you're calling them, it's 16%.
Mm-hmm. So
you know what's really funny? Almost no matter who you are, like I've seen freaking fantastic gangbuster people that you think, God, like this is like the Brad Pitt of the mortgage world, right? Or the insert in lady, the Oprah of the world, like everybody loves Oprah. They still run about 16%. And I've seen people incredibly socially awkward that, frankly, I've seen people that I thought, well, God, that's kind of an abrasive jerk. 16%. It's funny how that works out.
Yeah. So it's just about re-inputting those agents into your list and just constantly being in front of them.
Not constantly, every Monday.
Okay.
Yeah.
You just keep going, Julia. You just
keep consistently for 12 weeks.
Yep. Some will come out, some will pan out, some won't. It's only about 16% they're going to actually do business 16%. With you.
Which is a weird thing because I do this sometimes, like when I do events, like let's say if I'll just use an easy number. If I got 100 people in the room, just for easy math, if I got 100 people in the room and I'll count off 16% and get them to say yes, and I get the 84 to say no, I say, hey, can I work with you? Can I expect you to, are you going to send me a deal? The 16% says yes, and it's kind of a small noise. That the 84% says no, and it's like it's a little overwhelming. It makes me nervous, makes my chest tighten up. Even I know it's just in a demo that I'm doing. It feels weird to have 84 people going no, but that's just the way it is. And by the way, they're not saying no to you. They're not saying no to me. They're saying no to our offer. Big difference.
But I'm saying after the 12 weeks, they don't send you anything, then you switch them, you take them off your list and you go get more.
That's exactly right. I would leave them on my email list. I'd leave them on my Facebook Text. Targeted ads list. Yeah. I'd leave them, on, any kind of like, as Steve says, low touch. No. Low time, high tech, high touch. So high touch, high tech, low time. So any kind of automated, and I do that during the 12 weeks too. But I have to be doing the phone call every Monday, and then after 12 weeks, I keep doing everything else. I stop making the phone call.
And would you say the Monday follow-up phone call is more important than the Thursday text?
I would. That's kind of like saying, what's more important, food or water? It's they're both important. Yeah, and frankly, the Thursday text takes almost no time.
Right.
And if I'm not chasing conditions and doing stuff that doesn't move the needle, if I'm not doing those things, I got plenty of time to do both. The only time I don't have plenty of time to do both is if I'm doing non-money making activity. With the result of I feel busy, but I'm not being productive.
Yeah. Okay. Thank you.
You got it.
What was our
Thank you.
topic for today, Frank?
Well, we're going to get to that right now. We got all these hands up. So everybody with your hand up, leave them up. Leave them up. Don't worry. What we're going to get through, I'll get through in just about 8 minutes. So not a problem. We should still have plenty of time to get the hands. Okay. Because I know a lot of people have a lot of questions. This is great. This has been a great way to open the show to talk about these things. I think it's really great. So we all know we've got Kevin Gillespie's class coming up on builder business and investor business, right? And if you signed up for that, say yes in the chat if you've signed up for it. But just so you guys know, this investor business, it's a really, really cool thing to tap into if you haven't done it already. And it doesn't take a lot to get going with it. And so this is something that I've tapped into over the past, year, right? And I've really been enjoying it. And it's been a lot of fun. And I'm just shocked at how much business there is out there for it. There really is. Once I started getting the word out that I do this, people start asking me about it. Now, this is going to be a lower percentage of business than you're going to get from, obviously, from working the realtors, you know what I mean, getting the purchase business of the home buyer. That's a richer market, right, and easier to access because we go straight to the real estate people for that. But the builder and investor, and I'm going to talk specifically about investor and specifically about one quick product. This is just a good thing to have in your pocket. And so I just wanted to just kind of, if you're not fully familiar with, how a fix and flip loan works and, how you can offer this to your people, I was hoping that if you guys would be so kind that I could just show you something real quick, and we'll give you 2 downloads, a PDF on kind of what to look for, and then also a spreadsheet that I use, one that I've made myself that I use. That's pretty handy. I'll also tell you that what you're going to get here today is kind of just a snapshot snippet. We're going to go into a lot more detail. If you're a Mortgage Marketing Animal member, we have a complete loan officer class coming up this month where I'm going to go through more things in more detail. And I'm going to say this too. I'm going to preface this by saying I am by no means the know-it-all expert in any of this, right? I am not. I've only been doing this about a year. I'm still learning as I go as well. But the little bit of information that I've learned or the experience that I've gained, that's what I'll share. Right. That's what I'll share. So does that sound fair to everybody? Everybody good? You want me to dive into this real quick? So this is what I'm going to do. Let me try and share my screen here. The first thing we're going to do is go screens. We're going to go to this screen. We're going to share. And then we're going to bring up this one first. Okay. So let's see if I can just open this up a little bit for us so we can see. I just want to make sure everybody see the screen. We good? Can we see it, Jen? We're good? Okay. So first of all, when it comes to fix and flip loans, there's just really, guys, there's only 5 things to kind of get sort of good at evaluating, right? The first one, of course, is just loan to value. And as loan officers, we all know that. And you do look at loan to value, but it's not the real clincher in it. You kind of take a peek at that because we want to see kind of what the LTV is going to be of as an as is value. So a lot of lenders will go 80-90% loan to value on if they're going to be doing a fix and flip loan. And I'll tell you this, guys, too. I'm going to give you a link that you can access me if you want. If you happen to have something you need some help with, or if you just want more information, or if you're a broker and you want to know who I use, and I don't use a ton of them. I have just a couple that I like who I use. You're going to be able to go to this link and then access that, and I'll get you that information. But first of all, loan to value, it's just like anything else. When it comes to loans, loan to value is one of the considerations. We do look at that. The next thing, though, and probably the more important thing, is actually what they call the loan to cost. And loan to cost includes the purchase price and the rehab budget. Now, a lot of lenders will go 85 to 90%, and it really does come down to experience level. We're going to get into that, right, of the total loan to cost of the project. But I'll tell you, there are some lenders out there that will go 100% if you've got just a ton of experience. So if somebody comes to them and they do 8 flips a year and they know what they're doing and they can see a work history of what they've done in the past and it's all been successful and profitable, a lot of lenders will go 100 LTC just because they know the guy knows what he's doing. He's just out there doing business, right? He's a business person out there doing business. He knows his business about fix and flip. But if you get less than that on the experience level, loan to cost is probably going to be it's like 80 to 90%, just depending on the experience level. I'm going to show you a spreadsheet here in a second too, guys, so you can kind of see it visually. and I'll hustle along here. The next thing is after repair value. So, like when somebody approaches me with, I want to do a fix and flip, there's three things I ask. One is, what are you going to pay for it? Number two is, what's it going to cost to fix it up? And number three is, what could you sell it for? Right? Those are the three things, or the after repair value. Because when it comes to calculating, fix and flip financing, those are the three things that they kind of look at, all those things. And the after repair value is important too. So it's like you've got a few different loan to values. There's like three loan to values: loan to value, loan to cost, ARV, right? That they look at to make a determination on how much money is going to get lent out. Experience level is huge. This is the main thing when it comes to fix and flip financing. Have they done a couple of flips in the past 3 years from start to finish? If they haven't and they're doing it for the first time, you can still do it. There's still financing for it. It's just you might have to put a little bit more money down, have a little lower loan to cost. And I would tell you this too. This is a recent learning experience for me. When it comes to experience, well, getting a home that needs to be remodeled, right, and sold is a lot different than getting a home that they're going to add a bedroom and an ADU. Okay, that now we're getting into construction, not just remodeling. Do they have experience in construction? That becomes very, very important, right? If they've done 5 flips, but they've all been remodels, now they're going to do one. They're going to add square footage in an ADU. That's a whole different world. Now, okay, they're going to be scrutinized having no experience in that arena. Right. Therefore, some other things might come into play. Contractors might have to get involved, that kind of a thing. And I'll move quickly here since we're at the top. Reserves are big too. So not only do they have to have enough for the down payment and the closing costs, but they're also typically looking for about 6 months interest in reserves. And they're also looking for some at least about 10% of the rehab budget as well. Because, when it comes to building, construction and remodeling, sometimes things run over budget, right? So that's the thing. So what do you need to get something like this started? Obviously, purchase contract, the budget. If you're going to be using contractors to do the entire project or just contractors to oversee it and sign off on things, we need to know that stuff. Definitely would need to have an experience, a list, a work history, and on their experience, guys, what they're looking for is there's, let's say I had 3 flips. Okay, when did you buy it? What was the date? What did you pay for it? What did you put into it? Right? When did you sell it? How much did you sell it for? And what did you profit? They want to see the whole picture on the experience, so they can see this person knows what they're doing. If they see a fix and flip guy who barely makes any profit on his flips, or maybe is broke even or something like that, that's risky because they don't want to have to take a house back, obviously, right, or anything like that. So purchase contract, rehab budget, contractor bids, experience, proof of reserves, and then of course an appraisal. So there's that. The next thing I wanted to get into, and Jen, you can drop that in the chat, the PDF for everybody. Also, if you just want to reach out to me on this stuff, if you got something cooking, you want to learn more, if you want some help with something, or you want to know who I like, workwithlulu.com. Workwithlulu.com is the website. Now, I'm going to give you this spreadsheet as well. This is my own. There's a lot of them that are out there, and there's probably guys and gals on this call right now that are way better at this than me. I'm not trying to make out like I'm the absolute underlying authority expert on this. I'm not. But I have put together my own spreadsheet that I use for my own purposes that I'm going to happily give to you guys. I will tell you this: none of these cells are protected. So if you get this and you want to start making use of it, be sure to save a copy somewhere in a folder, and then create a new copy, call it something else. So if you screw up the cells and you delete a cell by accident or whatever, you can go back to the master copy. This is an actual deal that recently went through. So in this case, we had a purchase price of $440,000. The repair costs were $115,000. The after repair value was $725,000. The person did have experience and did have at least 3 flips, right? The person had $208,000 in the bank. Okay. So then we went down to, if we go down to here, we see the loan to value at 90, loan to cost 92. With experience, sometimes you can go above 90 on loan to cost. With one of our investors, you can, right? So it shows here, hey, it's 80%. This has to be 80% or lower if you're inexperienced, or you can maybe go up to 93. If this guy was inexperienced on this spreadsheet and I wanted to get this down to 80, I can do what's called an LTV override here. So I could do something like 78, right? Okay, let's say 76, right? Getting closer. Let's say 75. So in this case, I just kind of overrode the loan to value to 75, and that lined up my loan to cost to 80. If you can see that there. So that's what this is for. Again, on the loan officer, complete loan officer class, we'll go into this slower and more detail. Here's our base loan amount in this scenario, the things that we're financing, the total loan amount, right? The minimum after repair value for this thing to pen for an investor is going to be 593. This is 725, so we're really good there, right? Interest rate, required reserves, the 10% of the cost, rehab cost, the total reserves 27.9, right? Our down payment, our points. This I put 3 points in here. These can generally run between. They're typically going to be 2. On to deliver to the borrower, 2 to 3 is what they typically will be. You might be able to find some lenders that'll give it to you at par, where you can maybe do it for 1.5, something like that. Your title fees, your admin fees, appraisal, all that kind of stuff. Homeowners insurance, they're going to have to get a homeowners insurance quote, and keep in mind, homeowners insurance for a fix and flip is more pricey because it's like a construction loan. So they're going to have to get that. So in this scenario here, we've got the total cash to close is 132. Right? But I have to show 160, which includes my reserves. If it takes him 6 months to flip it and he pays 5% in costs, he's going to net about $94,000. Okay. So that's kind of how that works. I just kind of hustled through that for you guys. So
hey, Frank, me as a loan officer, are these, is that money given at closing, or do they pay it in draws, or
great question, Carl. No, there's a draw. It's a draw. So they'll never give the money up front, because what if they give the money up front and the work never gets done and they take off and then they're host?
Okay,
right?
I was wondering.
Yeah.
How about me as the loan officer? Do I get paid at closing, or
you get paid at closing on the total loan? So if the total loan, including the costs that they're going to finance, is $1 million, you get paid on the $1 million.
Got it. Okay.
Yeah.
I like that.
Yeah, it's just interesting, fun stuff. The spreadsheet is both in the PDF, are both in the chat. Just go to, Jen, you can throw the link in there too, workwithlulu.com, workwithlulu.com. If you throw that in there too, guys, you just want to reach out to me if you want to, if you might happen to have a deal cooking right now, or you want to learn more about it, or if you want to figure out who I like to use, just go to workwithlulu.com, just give us your information and we'll send it out from there. Again, we're going to get into more detail at the Complete Loan Officer if you're a member. So would encourage you to do that. Chauncey, you're up. Thank you for letting me divulge that. And but you had something regarding what we were talking about earlier. What do you got?
Oh, thank you for teaching me something. And I downloaded that spreadsheet as well, Frank. But I wanted to hop back to what Miss Yewande was speaking about earlier, I believe. And I think Sharon wrote something in there about joining the Freedom Club, et cetera. I wanted to add something on top of that. If you have not done a DISC assessment on yourself, you should. That's going to really help you figure out how you can potentially help people, and also learn about yourself and what things you're good at or what you have opportunities with. So a DISC assessment of yourself first, and then that'll help you in regards to your team members and everybody you hire. But first, look in the mirror and then figure out how to work it from there. So this is a good point that helped me.
That's a great point. It is good, because then you can see where your strengths and your weaknesses are. So that's wonderful. Thank you, Chauncey. Excellent. All right, we'll wrap this up with Cindy. What do you got? You're muted, Sin.
Okay, good morning. Sorry.
Okay, there you go.
This is kind of a big question, but my pain point that I'm having a lot with realtors in my calls, literally over the last 2 months, has been they have a ton of listings and no buyers. And I don't do direct to consumer. All my stuff comes from realtors. So I'm trying to think of how I can help them get buyers. And my area does not do open houses either. So I'm a little bit struggling with that. So I will take any ideas anyone has.
That's a good question. I'd almost throw this up to the chat.
Oh, yeah. Bill just did. Bill says move to.
I did look at move to, but again, with my area not even doing the open houses, I've shown it to my realtors and they haven't been interested. I'm in a very small town. It's very different. You know, they barely do DocuSign.
Small town sounds to me like bigger cup.
Are you saying that, and I'm not gonna say nobody, but nobody's buying a house in your area?
No, I'm doing well for the area that I'm in, but this morning the question was, what's your pain point? And I've noticed a trend that my realtors are telling me I have 21 listings, but I have no buyers. I haven't had a buy side in
So if I so I need here, I got a question for you, Cindy. We're going over to Frank's. He's having a barbecue over there. And he said, "Hey guys, can you pick up a couple steaks?" So you and I, we go to the store and pick up steaks. And we find ourselves in a vegetarian store. What do we do?
We leave that store.
Yeah, we go to another store.
Uh-huh.
Yeah. So just go to another store.
No, I mean, what I'm saying is I'm getting enough deals because I have enough realtors, but I want to help my realtors who have a lot of listings to get buyers. So I'm like, how can I work with them to get buyers?
I would just simply find realtors that have buyers and work with them. That's just my approach. Because my thing of like, all right, now I got to go consumer direct again. Now I got to go find customers for them to have customers so that then they can send me those customers. It's too many steps for me. So I look for people who already have customers. Well, wait, they had customers 6 months ago. Okay, well, they don't today, so I need to go find out who does.
Okay.
Yeah. I mean, it sounds simple, but it really is.
Yeah.
It's just find people that have customers. I had a guy taught me something years ago that I never forgot. He said, "Look for people who are looking for you. Look for people who are looking for you."
That's good.
So that's what I do.
Fantastic.
I like as few steps as possible.
Right.
Yeah.
Okay.
Right. Now your goodness is, hey, I want to help them out because I'm a nice person, and that's awesome. That's great. And I suppose, I mean, for me, there's only one reason. Like if they say, hey, I don't have any buyers, they don't have anybody calling their listings. Why is that?
There has been, it's like I said, this area is so different. We're having suddenly a flood of listings, whereas before we didn't have anything. And it's also way below kind of the national average of income. So the people who can get pre-approved, the houses are just too expensive.
All right. So how can we get buyers? Lower the price of the home.
Yeah.
That's it. Hey, let me tell you something. There's only two reasons, and two reasons only ever. There's only two reasons, period, on why something doesn't sell. Either A, nobody knows it's for sale, or B, the price is wrong. And they go, well, but because the factory closed up, then the price is wrong. Yeah, but you don't understand. It's because the builder all of a sudden built all these, because the price is too high. You lower that. I guarantee if they put a sign out there, and I'm going to be ridiculous here for a second, if you allow me. If they put a sign up there that said house for sale, $300,000 house for sale for $1,000, that have people lying down the street.
Right.
So now we have nobody on the street looking to buy. So we need to find out what's that price between what is that price where people start coming back in. So they got a price problem.
Right.
You go, well, wait a minute. 6 months ago they would. Well, okay, yeah, same here. Congratulations. Not today.
So it became real easy for you. He just lower the price.
But nobody wants to hear that. That's why I work with people that already have buyers, and it's a whole lot easier. Because if I come to Cindy, you're charging too much. What do you mean I'm charging too much? What do you? They bought this 6 months ago it was worth this, and I'm not even going to go into that conversation.
Yeah.
Right. And so many of my realtors who used to be on Zillow, because so much has changed with that, they're not on Zillow anymore. So I think it's just been a little bit of it's been a strange year for realtors.
Yeah, it was going to get stranger if they think taking their house off of marketing is the answer. It's going to get real strange for them.
Yeah.
Yeah.
Okay, guys. So thank you very much.
Thank you, Cindy.
I appreciate it.
Great question, Cindy. Good to see you, my friend.
Hey, if you're liking Loan Officer Breakfast Club, you really need to check out Mortgage Marketing Animals. Don't forget, we have live events pretty regularly throughout the year. You can learn more by going to mastermindretreats.com. Mastermindretreats.com. Go there, check it out. Hope to see you at one. Sean Santoro, what do you got? We'll go a couple more here. We're only 8 minutes.
Good morning. Good morning, everybody. I know we're over, so I will make it super, super short and sweet. One thing that I've struggled with, which is, you'll get some referrals and you'll rock out the deal and everybody's happy and everybody's good, but you want more from that same agent, right? And I know Steve's got a script on this somewhere, but I want 100% of your business. And again, right, whether they're willing to, whether they're not, you can't control that. But what do you guys find is an effective way of asking that?
The follow-up, the follow-up refer back program. Are you familiar with the follow-up for refer back program?
I could take a quick refresher.
Kristen, can you or Jen hook him up so he can? It's more than a 5-minute conversation. 100% that'll solve that problem.
Yep.
Perfect.
It's the best. It's absolutely killer. It takes about 30 minutes to teach effectively, so that you could go, okay, I got it. Now I can go do it. It takes about 30 minutes. And so Kristen or Jen will drop a little thing in there, and you can do that, and they'll walk you through it. It's amazing.
And if if anyone's not a member and you want to learn about the follow-up refer back, go to dailysuccessplan.com.
It'll solve that problem.
Dailysuccessplan.com.
Yeah. Very simple solution.
All right.
Great question. Simple solution.
Chauncey, you had your hand up again. Did you have anything else? You bet. You bet, Sean.
I just want to help Cindy real quick. Definitely take what Carl said to heart in that regard. It's usually a price problem. That's usually what the issue is for sellers. But there's a program, if you all are not familiar, it's called Knock. Just like you knock on the door, KNOCK. I actually closed 4 deals in the last 4.5 months through them. Was a bridge loan product, but it does not, I repeat, it does not affect the DTI. So it's a bridge loan product that does not affect the DTI. So if you all get a chance, look at Knock, look at them, and that's something that can help, okay? But if the property's been listed for a long period of time on the market already, it's not going to work. You got to kind of get it on the front end, okay? And what they do is very, very quickly, what they do is they'll lend up to 80% the LTV on that property after the expense. So let's use easy math. Let's say the house is worth $100,000. Let's say the client owes $40,000 on it. They will give you $40,000 you can use to purchase the next home, okay? They also have a guarantee that they will buy the house if the house does not sell within 6 months at 80% LTV, okay? So that's something you can look into, and also it builds a reserve and stuff to the side for the monthly payments, but it will not affect your debt to income ratio on the next purchase. And it helped me close 4 deals, and those realtors love me now, and they're sending me more deals because of that, because I had a solution. So look into Knock if you all get a chance.
Yeah, it's knock.com. There it is. It's in there. Monica put it in there, knock.com. And I tell you what, guys, do me a favor, because I'm chatting with them. I wanted to bring them on as a sponsor, right? And let them know you heard about them through Loan Officer Breakfast Club. Thank you, Chauncey. They're a very cool bridge loan that's out there. So Knock. Let them know you heard about it. All right,
so we need a phone campaign. Get a hold of Knock. Say, hey, I heard about you on LOBT this morning with Frank. Tell me more.
It's true. That'd be great. Yeah, I was on Breakfast Club and heard about it. Yeah, that'd be terrific.
Frank out. So let's barrage him with like 100 phone calls.
That would be awesome if you guys did that. Yeah.
No, when you guys do that, not if. When.
When you do that, that would be great. Yeah.
Hey, somebody's got to write a check for this stuff, right? I mean,
that's right.
This don't come free. No, really, this don't come free. So if you guys can help us out, we can keep the platform free. Go message them, email them, call them, something. Really.
Yeah. Mention Loan Officer Breakfast Club. No. Yeah. All right. Hey, man, good day. Everybody have a good day today? We're ready to go make our realtor calls today? Who's got their hands up? Everybody ready to go make the realtor calls today, right? Everybody good to go? Okay, guys, let's go get it. You guys have a great day. We'll be here tomorrow. Tomorrow's going to be great. We're going to have, I forget her name, called Jody. And Jody. Yeah, she's going to be talking about how to become a divorce expert in doing loans, how to find that business, how to handle that business. So if that's one of your niches that you were looking at, divorces, tomorrow's your show. You're going to want to be here tomorrow.
She literally wrote the book on that. So she's fantastic. So
that's tomorrow.
All right. Thanks, everybody. We'll see you.
All right. For those who got to go, we'll see you later. Thanks.
Have a wonderful day, everybody.